Welcome back, folks. I am Jon Najarian, and this is 3 at 3. 3 at 3, we bring you the unusual activity that we see in the stock market and options markets. Let me show you what we're looking at right now, because unusual activity, as we see it, is something that occurs every day. Sometimes for nefarious reasons, sometimes just because somebody is very smart and acts very quickly on a large block of calls, which we would say is bullish, or a large block of puts, which we might say is bearish. So let's get started with this for Monday, the 18th of. We have unusual call buying with the stock at $39.42. Stock traded over $50 today. So what would the right to buy it at $39 be at 50? $11 plus a little extra. Look at all the other ones we had too on the 13th of December and on the 11th of December. Somebody was taking a pretty good shot that this one might be taken out. And they were right, my friends. I love when something like this comes together because it just proves out our theory that the unusual activity leads to or precedes these big moves. How about this one too? This was from the 13th. 13th of December, Cliffs, 1767. They bought the December 22nd expiring 18 calls for 23 cents. Well, Cliffs trades through 20 today. And those calls, as you see, the big box near the bottom of the page, $2.40. Well, that's a 10x, my friends, 10x. Because if you paid 23 cents and it goes $2.30, that's 10 times what you invested. That's why we love trading these options, folks. Let's take a look at another, shall we? How about this one? USO from Friday. So we had U.S. Steel on Friday and USO. USO is the United States Oil Fund. Well, it was $67.03 on Friday. It's $67.72 today. So another nice pop to the upside. And those January calls, again, you know I didn't buy the 76s. I buy at the money and I sell upside. I'm going to let it run a little more. Those Red Sea attacks make me think that maybe we'll see higher, not for longer, but higher in the short term prices for crude oil. All right, let's take a look at the books, because our book commercial's been running on CNBC, on Fox Business, on Fox News, on CNN, on Bloomberg. It's all over the place. And why not? We've sold over 400,000 books coming into this year, folks. And this is our first new book in 3 years. So our newest book is called It's Not an Option. And there are Pete and myself on the cover of that book. It's Not an Option. Encourage you to check it out. And if you'd care to, get your book at itsnotanoption.com. That's itsnotanoption.com. Because just trading stocks and not trading options, that's not an option. Bang. All right, fresh stuff for today. With the SPY, that's the S&P 500 ETF, the SPIDER, trading at $472.53. We see 44,000 of the 5th of January, that's the 5th of January, 476 calls, trading for 325. Somebody's betting that we're going to see a pop out of the S&P 500 between now, today, the 18th of December, and the 5th of January. Do we know when it's coming for sure? No, but somebody put down a pretty big trade. What's 44,000 times $325? Because remember, every option is for 100 shares of stock. So when I say 325, that's $325. What's $325 times 470? Times, so what's $325 times 44,000? That's how big a trade this is, folks. Bang. All right, next one. Take a look at PSX. So is somebody betting that maybe we see some higher prices for Phillips 66? Probably, because it's 132.66, and in March they're buying the 135 calls. So those are about $2.50 out of the money above where the market is trading. So with that happening, we figure let's run right with them, folks. That's what I do. Again, I can't invest your money. I do not give investment advice, but I can tell you how to trade it. Bang. Whoops, sorry, went by too fast. Whoops. There we go. Hilton. This is a big trade because 13,000, somebody replaced a lot of stock because 13,500 options. Again, throw two more zeros on the end of it. It's 1.35 million shares of stock equivalent because every option is 400 shares of stock. So when you trade 13,000 options, that's 1.3 million. With it at $178, the strike price they bought, it wasn't above the market. It was beneath the market. In other words, these are in the money. ITM, in the money. So April, 155 calls. What are they worth? What's the right to buy it at 155 if it's trading at 178? Well, it would be a pretty significant amount of money. Some, let's call it, I don't know, $25 or so roughly. Well, so that's why they're trading for $28 because 155 from 178, obviously $23 and some odd cents, and you've got financing costs between here and April. So somebody wanted an in-the-money call. They're simulating what the stock movement will be between now and April. And they paid the offer. So these were purchased. Somebody probably owned a lot of shares and flipped into the options instead of being in the stock. And that's a much better levered position, wouldn't you say? Because how many times does 28 go into 178? A decent amount of times, almost 6 times, right? So you get 6 times the leverage owning the option versus owning the stock. Bang. All right. That's going to do it for us today, folks. We always encourage you to go to marketrebellion.com/get started. That's marketrebellion.com/get started to learn more about trading stock, options, or futures. We got them all at marketrebellion.com. Check it out, and I'll be back with you tomorrow. But tomorrow I'll be in Puerto Rico. So with that said, we're going to just run the disclaimer quickly, and I thank you for joining us, folks. I hope you have a fantastic day, and we will see you tomorrow.